So we are going to go over the financial leak checkup, where your money is slipping away. And everybody, no matter if we're grinding, paying bills, or we're just living life and just doing what we want to financially, everybody has opportunities to improve their finances. So we're going to talk about that specifically. So most people aren't where they want to be financially because they are leaking money in different ways. We're going to go over some of those ways. First and foremost, though, the biggest way that we can immediately cut back on our bills is check our subscriptions. You see, most Americans lose literally $1,000 each year on hidden leaks, and a lot of that are subscriptions. We're going to give you some pinpoint websites and ways to basically make sure those subscriptions that you're overpaying stops. And I use myself as an example, right? I love my sports. So we have the we had the ESPN app. Our daughter app use Hulu. Those three subscriptions before we bundled it. Last year we paid between those three apps $160 a month. Just crazy. Whatever. We paid $160 a month. Not knowing we could bundle. We bundled those three together with the same services, but just bundled together. Now we're paying for ESPN. That's $100 a month. That is $1,200 a year. And we're going to go over how we was able to identify that and how we was able to automatically get it updated. So these leaks get a notice and it keeps away from your savings, investments, in your future. So the first is a subscription. The subscription overload. And I call it the silent wallet killer. And it killed my wallet for 3 years because we were paying for Disney Plus, ESPN Plus, and Hulu Plus for 3 straight years separately instead of having them combined. So certified financial planner, not even doing it correctly. So even the gurus of the world, and I'm not a guru, but even though the gurus of the world per se, they get it wrong, right? So the average American spends $219 a month on subscriptions. A lot of money, right? Just check if you have Apple. This is what it gets you with Apple. Because with Apple, it's just a subscription, it's just a renew, right? So it doesn't pop up on like account if it's through Apple, even through Google Pay. That's how they get you though. Subscriptions. And 66% of people forget paying at least one unused service. That means for every 3 people on this webinar, 2 out of 3 people right now are paying for something that they don't even think about. So ABCI is an educational platform. Well, our daughter is 11 years old. Don't you know that we was paying ABCI until she was 9? It was about 5 years where we never opened it up, never used it, but since we did it through Apple, it's $109 a year. Over 5 years, that's $600. If I had that $100 invested in the stock for over 5 years, that may have been $1,000, maybe $2,000, right? So yes, $100 a year is not going to break the bank perfect, but still, you add that over time, and you think about where that could have been added somewhere else, it makes a huge difference. So strongly recommend everybody, you go to Apple Pay, you go to profile, when you go to settings, you go to profile, then you go to subscriptions. Again, in my mind, you can put this in the chat. Anybody, I don't know about Google, okay, because I switched over from Android to Apple about 9 years ago. Best decision. I was one of those people, Google everything, what Apple, it's too wonky. I came to the light, like I went to Damascus when Saul became Paul, right? Came into the light, and now it's Apple everything. But if you have Apple, go to settings, and again, my mind, y'all can put this in the chat. Go to settings, go to profile, and go to subscriptions. And you will be amazed on how much you're auto paying, because literally when you get the alert, they're so slick. The alert, it just pops up. If you say renew or don't renew, it's going to renew automatically. It just pops up. So, a lot of times you get so many alerts, you just delete stuff, right? And for years I was deleting ABCI. So do those, and we can identify a lot of money. And the most common leaks are streaming services, Gym memberships, we was paying for Orange Theory. So we did Orange Theory, especially during COVID. We had Orange Theory, then COVID happened. So we did Orange Theory at our house so we could be around people virtually, right? We haven't went to Orange Theory in 3 years, but we was paying it up to 6 months ago. So again, it's just, it happens to everybody. App trials, if you sign up for an app for 30 days, you put your information in, but it's up to you to actually cancel it. Because if you don't cancel it, they're going to smack you with that membership. And once you pay, you got to wait that whole year. And a lot of companies are slip too. Because a lot of companies, what they do is say you can't actually cancel or identify to be canceled until 3 months. So let's say you sign up for something June, you're like, I didn't want to do that in July, but you can't do anything about it. So how are we going to remind ourselves May of the next year to cancel something in June? Like it's out of sight, out of mind. That's how they get you. That is a psychological advantage they have by doing those types of things where you can't cancel up until 90 days. It's a tax write-off. But with other business softwares, right, we see this a lot with tax professionals. So it's a tax planning software called Corby, and we use that as well to help our clients with tax mitigation and tax reduction. But then they also use a platform called Instead Pro, which is basically like a lesser expensive version of Corby, but it does the same thing. But since it comes with Corby, you sign up, and then a year later you pay $1,500. So it's a lot of overlapping. Another thing that people do, we see a lot of things like go high level and click business owners. Issues go high level. Or my business owners, we have our call tax estate, hop on because the owners of Communicate is actually going to show people how to automate Facebook ads at no cost. So if you guys have go high level, or you guys have clicks funnels, or you guys have Salesforce CRM, or some of those others, it's going to allow you to basically put everything in all in one platform like Communicate and only spend, I think they're $80 a month. Again, I don't know, just to disclose that, but I think it's $80 a month. But if you can go from paying $300 a month to $80 a month, that is a lot of money that you save. So tools that can help you find and cancel unused subscriptions. So we're going to actually go over these tools for you guys, because it's one thing just to tell you guys stories, but also we want to give you actual advice that you can use, right? So some of these tools, let's get out of this. Let's stop the share. Hold on 1 second, you guys, because I gotta go to the website. How do we get out of mode? There we go. Okay, cool. Oh, sorry, let's share my screen again. This is a work in progress today. We're working through it. Yes, we got it. Okay. So the first one, Trim. So trim.com. So, or the actual website is asktrim.com. Right? AskTrim.com. This is where I'm sorry, this is actually for, that's not, Trim is for, not Trim, sorry, Rocket Money. Trim is for groceries, we'll talk about here in a second. But RocketMoney.com, I use Rocket Money. And so I just want to disclose, I use Rocket Money personally. And also, they also have Rocket Mortgage. And one of my houses that I have, I got a mortgage through Rocket Mortgage. Actually, I used the company and I used Rocket Mortgage in the past. So I had to disclose that. So you guys know I actually used the company. Not an endorsement, not at all, because they ain't paying me. And it's not an endorsement, because every company has their goods and bads. But Rocket Money, this allows you to link your bank account, your personal bank account, and it gives you a breakdown of what is a subscription, what are groceries. So you can say, hey, I want a budget where for every $100 I have in my bank account, only $20 goes to subscriptions. Only $50 goes to groceries. You can segment that, and then it'll tell you each month if you're in compliance or if you're out of whack. So you might say $50 out of 100 goes to groceries, but you're spending $70 at the grocery store. It'll identify that. So you're alerted that, hey, I need to cut back on my groceries. So, Rocket Money is one. Also, hiatusapp.com is another one. It actually breaks down not only your subscriptions, but if you want help, meaning that you want them to call on your behalf to negotiate those subscriptions down or cancel them. If you're a business owner, you don't have time then you can literally have Hiatus app do it for you at a small fee. And they will actually, cancel those subscriptions for you or call and try to negotiate. Because it's like me, I have Comcast at my office, but I get those calls all the time. Hey, switch over to Comcast. You're going to get, 6 months free. I'm like, well, I have Comcast already, but I can't get that deal because I don't want to sign up for another 3 years, right? Well, companies like that actually call on your behalf and see what deals are out there, and they negotiate the current the current bills that you have now, and if you can actually negotiate getting something new. So if you're a business owner, you don't have time, they basically do that for you. So I said, yeah. Let's see here. So I also do a Rocket Mortgage, and you get it for. Oh, okay. So Mrs. Harrigan said if you have Rocket Mortgage, have a mortgage with Rocket Mortgage, and you use Rocket Money, it's actually for free. See, I didn't know that. I guess I don't pay either. My wife handles all that. Right for that. But yeah, that's awesome. So it's free. It's free. Again, not a recommendation on Rocket Mortgage. Disclose my business partner does mortgages. I know we refer people to Capital Core Lending Group, but yes, if you have Rocket Mortgage, it is free. So that's awesome. Okay, Tony, you use Rocket Money as well. And for the 2 people that use Rocket Money, have you guys had good experience with them? Just put a 1 in the chat if you guys had good experience with them. Okay, well, okay, good. There we go. There we go. All right, there we go. Okay, cool. Cool. Awesome sauce. So yeah. So that is that. When it comes to the services, we present this again to you guys. All right. So yeah. So we talked about Rocket Money. We talked about again trim, and then we also talked about Hiatus as well. So before we talk about the next subject, which will be how the IRS is trying to get all of our money and how we can stop them if we're a business owner or just a person who has a W-2 job but getting side income like a side gig, how we can basically stop IRS from getting some more money. So what other questions about subscriptions do we have so we can answer them before we go to the next subject? Awesome sauce. Okay, cool. But if you have questions, like I said, the worst question is the one not asked. All right. So the IRS wants a cut. Let's put a 1 in the chat if we had to pay the IRS taxes this year. So anybody that had to pay Uncle Sam taxes this year or last year, because I know if you're a business owner, you get to extend until September 15th, right? Now, everybody, we should all be putting 1s in the chat because we all pay in the IRS. We all pay. That's why right now I am doing the webinar. Instead of doing it on Monday when I was in town, I want to do it now because by me doing a webinar, it's a business expense. So some of the travel is a write-off. So the IRS is paying me right now to do this webinar, right? Because we don't want to pay the IRS, but we all are paying the IRS in one shape or form. So we're going to talk about how to get the IRS out of our pocket. And the hidden trap of 1099s is Cash App, Venmo, and PayPal, because that triggers a 1099. You see any payments that's over $600, if it's one payment or it's collective payments, right? So somebody pays me $100 for whatever over the course of a year. If it's more than $600 from one person or for many people, I get a 1099. Now, even though you might not report that 1099 when you do your taxes, by law, those companies give that 1099 to the IRS. So they know the money that you're making. Are you reporting it? That's a conversation for another day. So even personal transfers can be misclassified if not labeled property. And a 1099, like I said before, is sent directly to the IRS. So they expect you to report it as income unless it's clearly personal. And see, the IRS, they want you to pay, but they are more concerned about you filing everything compared to paying because they know that it's going to charge you interest and they're going to charge you penalties. But they also want to know what money's coming in. So if they ever want to audit you, if they ever want to do an examination, they have all the information. And you are the ones that have to justify everything. Not so they could be wrong, but if you don't prove yourself right and prove them wrong, then you will be in trouble from an auditing standpoint. That being said, safer alternatives, Zelle. Anytime somebody is sending me money, I say, send me money via Zelle. Because Zelle is a bank, the bank transfer, meaning no 1099. So when anybody ever sends me money, hey, let me, cash app you. No, don't cash app me. Send it to me via Zelle. And this happened 2 years ago with a client of mine that was a barber. He literally took about 20 to 25% of his payments via cash app. But also, as the year goes on, right, people were sending stuff cash app. He had a football drive because he's a football coach in Jacksonville, a Pee Wee football coach. He did a couple football drives. So people were donating money to him via cash app. Nothing to do with his barbershop. Well, guess what happened? He got examined. He's going through examination right now. And the IRS is having him justify because of those 1099s that he didn't report. He didn't report everything. He reported a haircut income, but he reported everything else. So, he reports one thing, the 1099 from Cash App reports something different. He gets examined. He has to now justify those, right? So he has to go through all the Cash Apps over time. Like that's tedious work, right? But if everything was done via Zelle, he wouldn't have had that problem. So prayerfully, nobody's going to get examined. No one's going to go through an audit, but I would strongly, strongly, strongly recommend that payments that we receive, we get them via Zelle and not Cash App. So yeah, okay, couple comments, great. I get refunds, LOL. Have a great tax repair. Okay, yeah, great. Okay, yeah, okay, cool. And it's good to have that great tax strategy as well. We do tax strategies and we've been blessed to help a lot of people with their taxes. But yes, we want refunds and finding ways like this to make sure that the IRS is not stupid around is always good, right? Or you could do Apple Pay or Facebook Pay. I don't know about Google because, like I said, I don't know. I don't use Google. So if you guys receive Google Pay back and forth, and there's no 1099, then let me know or let the chat know. Education is the key. But I do know for Facebook Pay, and I know for Apple Pay, when you Apple Pay a person, it does not count towards taxes. It's not a taxable event. It's no reporting to 1099. So literally, to make sure that if we ever get examined or audited, we don't have no explaining to do to the IRS. I strongly, strongly recommend do not take anything personal via Cash App. And actually, with Cash App, it's only, one bank account per se, right? So if you have everything from just a structural standpoint, we want a structure where anything and everything that you receive that could be looked at as business related is business related. So if everything you're getting on Cash App and it's tied to your personal account, then you got to move it from your personal account to your business account, or you might not move it to your business account, but you create something that's an expense. From a documentation standpoint, it's hard for your tax person to justify the tax strategies that we create to get you the best bang for your buck. So I would strongly say, even though it's convenient, let's try to stay away from Venmo, try to stay away from Cash App, do Zelle and Apple Pay or Google Pay. So yeah, questions there before we go over interest, which I talk about all the time, but interest is a silent killer. Cash App. Oh wow. So Davis, Cash App close your account by buying cryptocurrency. And again, correct me if I'm wrong. And this is why it's great to have this community of we all learn from each other. So Dr. Hollins, don't want to mess that doctoral degree you got, Dr. Hollins. I thought that you was able to buy cryptocurrency on Cash App. Now, from a disclosure standpoint, we recommend buying cryptocurrency, Bitcoin, Ethereum, and now XRP. You can buy that on the stock market for Bitcoin. The symbol is IBIT. My mind, you guys could put this into the chat. IBIT or FBTC. So it's on the stock market. So you have to worry about a person stealing your crypto. You guys saw Coinbase, like the largest exchange of cryptocurrency last week, had a 20 million rug pool per se, where hackers stole $20 million of Bitcoin from people. Now they are going to get it back. And they said the people that lost that Bitcoin, they're going to get it back. So we'll see if that happens. But if it was through the stock market, that would not have happened. So again, with Bitcoin, it's IBIT or FBTC. For Ethereum, the symbol is EETH. So Edward Tango Hotel. Again, you can buy your Ethereum directly on the stock market, not have to worry about it being stolen. or XRP. The only one with XRP right now is symbol XXRP. So as of today, those are the three cryptocurrencies that are regulated that you can buy on the stock market. Anything else, you can buy it on Coinbase, and I have to disclose I have cryptocurrency other than those three on Coinbase. So that's what I disclose that. They have Bitcoin though. My Bitcoin's on the stock market, so mine didn't get stolen. But yeah. So I hope that's helped. So Dr. Holland said yes, you can, but they close your account because of it. That's unfortunate. So cool. Awesome. So the interest trap and how banks profit from your balance. If you're carrying a balance, you're basically donating money to the bank. I talk about this a lot, but I just like to drill home because banks make so much money off of people. I'm not going to say not knowing, but just, not having time to do stuff, right? And we're going to talk about the end, what you can do to hire a virtual assistant, how easy it is, what site to use so that you can just hire a virtual assistant, maybe 2 hours a week or, 10 hours a month for, pennies on a dollar per se that can do this stuff for you. So it's out of sight, out of mind, but it's done. It's going to save you a lot of money, right? But the average credit card APR is 21%. Yes, we get those 0% interest cards in the mail from time to time, but the average person, for every $100 they owe, a credit card company is paying $21. Even if you have exceptional credit, people on average that have a credit score of 730 or above, their average credit card interest rate is 12%. So yes, this 21% is spiked up because of people having, not as good as credit as they want to, but you can have great credit. And great credit is an is a credit score of 720 or more. You're still on average paying over 10% of interest on an annual basis, right? So if you carry a $5,000 balance, you're paying $1,000 a year. And if it's personal, it's not a tax write-off. So a few things we recommend. Number one, if you are a business owner, every single thing that you do that with your business credit card. Take a drink of water. The reason why is because, first off, points. When something is a business credit card, you historically, not always, but historically, you get more points on a business credit card compared to a personal credit card, right? And again, as I said a few times, I'm in England right now. We actually paid for the England trip with our points. So our flights, our hotel, some of the things we're doing, going to castles, all that was paid for points. So literally, like out of our pocket, we're paying really next to nothing out of our pocket. The things that's out of our pocket, it's a business write-off because we're looking at real estate. And then also we're doing webinars and I'm calling clients. I'm actually working. So we're able to get the write it off at the standpoint. But once you do that, let's say we charge something on our credit card on the first. Literally every single Friday, I recommend this to everybody. Every single Friday, we use our business debit card or our business account to pay that business credit card. The reason why we do that, number one, each time we pay something down, that increases our FICO score by 2 points. Number one. Number two, we have a credit card utilization rate that is less than 30% at the end of each month. That increases our FICO score by 2 points. And also, when we have a card that's paid off at the end of the month, that also increases our FICO score by 1 to 2 points. So with the utilization, that means that I have money, but I'm keeping it under the rate, which is 30%. I got a balance or a credit limit of $10,000. If I have a balance of less than 3,000, that does look good for the creditors and for FICO. If I got that same 10,000 credit limit, but I have a balance of $6,000, even if I pay it off at the end of the month, but since that 6,000 or 60% is above 30%, that makes it look bad on my credit. Even if I'm paying it off month by month, it looks bad on my credit. So we recommend if you get 3 or 4 business credit cards and put as much, if not all your bills on that business credit card. And then again, at the end of every single week, every Friday, have your business account pay that off. That allows us to have points that build our business credit as quick as possible. And also, we also want to use a service. Now, some people use QuickBooks, and I have to disclose, I use QuickBooks. However, QuickBooks is horrible, 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 horrible. I recommend using Wave apps. I'm blessed to, have ownership in 7 different companies. The main company is QuickBooks. Everything else is Wave apps. So Wave, WAVEAPPS.com. The great thing about Wave apps, unlike QuickBooks, is that it's user friendly. Once you categorize a bill, it automatically categorizes for you. So if you're a business owner, you don't want to be, keeping receipts, right? But if you do everything through your business credit card and it's linked through Wave apps, and my mind, y'all can put that into the chat as well, Wave apps. But if you have it through Wave apps, then it categorizes everything. So when it comes time to do your P&L, your profit and loss statement, your income statement, or if I'm a W employee, I don't have a business, it's good from a budgeting standpoint to see what's coming in and what's going out. It's done automatically. You don't have to run reports. You don't have to create things, input information. So for people who do your taxes, right, they love it because whatever tax strategy you created, they're actually able to implement that because you have real tracking. But that goes back to credit cards. And I am a huge proponent of credit cards. Also, refinance every single credit card you have after 90 days. Okay. If we first get a credit card, we could actually ask them to decrease that interest rate or increase the balance. I'm sorry, the credit balance in 90 days without, them looking at your spending habits. But after 90 days, it's not a hard or a soft pull to your credit, but they do look at your spending, right? And that's why that utilization standpoint is so key, because if we are staying below our utilization and we have a 15% interest rate and 4 months later or 120 days later, we call and ask them to reduce that interest rate, it's a possibility they will reduce that because of your spending habits and you having a low utilization rate. So I would not just say it is what it is. I got this credit card. I had it for years, or I got the 0% interest credit card. Now it's paid off. And now after 12 months, I spiked it up to 25% and I put money on it here or there. No, I would strongly recommend every single credit card that you have, call them and negotiate it. And you can do bi-weekly payments to reduce interest faster. I'm OCD because I don't want to give the banks none of my money. So I actually set things up automatically to be weekly and not bi-weekly, but you can set up to be bi-weekly. And like I said, negotiate a lower APR. It works more than what you guys think. So what questions do we have there before we go over the last 2 subjects? Awesome. Yeah. So, was that Wave apps? So yeah, you can download. So Dr. Hollins had a question. Should he download it from the App Store? Nah, it's web based. So they may have an app, but I would just use the web based version. I put up on the screen too. Dr. Hollins, you guys can all see it as I'm talking. www.waveapps. Waveapps. And the cool thing about Wave apps is $20 a month. Do screen share, Mario, screen share. Yeah, so QuickBooks charges you $100 a month. Wave apps, the free version, they have a free version where you can have your personal account. So again, you have a personal account, use this as well for your tracking, right? One personal and one business is free. If you have more than one business account, then it's $20 a month, but that's it. It won't be no more than $20 a month. So yeah. So there you go. Is Wave apps, waveapps.com. Your username, password, sign in. And it's very, very cool. So I would recommend anybody and everybody, especially if you're a business owner, use this or QuickBooks. But in my personal opinion, because I use both, use Wave apps. And they're not paying me, so I ain't a paid endorsement. They need to pay me because I probably referred about 300 people to Wave apps the past 3 years, and they ain't giving me no money. But you want to do what's right for your client. So yeah. So it's Wave apps. Okay, cool, awesome. It's great because you don't yeah, you don't like QuickBooks. Yeah, yeah, right. Does this mean we don't a bookkeeper now? So Evelyn had a question. Does this mean we do not need a bookkeeper by using Wave apps? So bookkeepers are important. So me, Mario Joseph Payne, I don't have a bookkeeper, but of course I'm a CFP, right? I mean, we do taxes for people. We run tax strategies. So we use Wave apps from a bookkeeping standpoint. And if all of your bills are being put on that business credit card or that business debit card, like I talked about, then theoretically speaking, you don't need a bookkeeper because it does everything for you. So if you're disciplined, then you don't quote unquote need a bookkeeper. However, we have bookkeepers here on the call, right? So they would probably say ways which is definitely justified why you would still need a bookkeeper because things slip through the crack and people forget, right? So it's hard for me to tell you or anybody not to pay a bookkeeper. But if you're asking what I do, Mario Joseph Payne, because how we have things set up, how we have systems in place, we don't need a bookkeeper. And if you want to have a side conversation, how we can help you guys set things up, then, that's what we do as certified financial planners for our clients. So we can definitely help. So, but again, one of the bookkeepers want to let us know why a bookkeeper might be important. Definitely put that into the chat as well. That's why we're here to help people. So great, great, great questions, you guys. Great, great questions. All right. So two more things. Let's go back. Let's get out of these because we don't need these anymore. I just talked about that. Okay. So then groceries. Groceries. We're trying to find all the money that we are spending and how to get it back. So on average, the average family of four spend in between $250 to $600 a month extra in groceries or grocery related items because of lack of planning. And again, I like to use ourselves, right? We have things on subscription on Amazon, kind of paper towels. Sometimes we use paper towels more, and so we say, okay, let's put this on, once every week. And then it's like overload and we have too much for like 2 months, right? So we fall victim ourselves. So this is not like a you problem. This is a me problem. So I'm coaching myself too. Right. So yeah, but it is things that you guys can do to get paid by using and going to the grocery store. It's actually two ways. First off, use a credit card. Use a credit card. Even if it's on your business credit card, it's still points. And when we use our credit card, we get cash back. When I say seldom, I seldom use a debit card to pay for things. So of course, like mortgage, you can't put, well, you can put it on a credit card. But again, we can have that conversation if you want to, but there'll be some fees involved. But you typically can't put your mortgage on a credit card. But really after that, anything that I can legally do to put on a credit card, I don't use my business debit card or my business or my personal debit card. We pay things with, of course, our business account and with our personal. But yeah, you want to put anything and everything on credit cards for the points. But also, you can double dip. When we go to the grocery store, points will pay if we pay for our credit card, but then also you can use cash back apps like Ibotta and Fetch. And again, this will show you guys. Come on. Okay, cool. Yeah, so Ibotta, so they have, I think over 1,000 retailers. And and again, I'll talk about how I do this because I do this myself. I don't have no time, but I have one of our virtual assistants do it for us. Literally has access to our credit card information and basically whatever stores we use, get those automatic online receipt and then apply for cash back. So I actually use Ibotta myself. It's a way for you to get cash back. Now, you might get back, $500 or $600 a year, right? So it's not, now if you go, I mean, again, this is me, my wife, and my daughter. But if you have a family of five or a family of six, or, you're helping a lot of people with groceries, adds up. But it's basically free money that you can take advantage of. And then also Fetch as well. The same thing, you get cash back by going to those stores. So you can double dip. So you get paid. So they are paying you. A credit card is going to pay you for using the credit card. And if you pay things off like we talked about, you're not going to pay any interest. So it's basically free money that they're giving back to you. And also these two apps are giving you money for going to the store. So it's two ways you get money back. And over time, that money adds up. And yes, you're not gonna get rich off using these, but if it's an extra $1,000 or $2,000 a year, I mean, I'll take that. I mean, $2,000 a year over 10 years is $24,000 in an index fund, not even with us helping you really make money from an investment standpoint, but just in an index fund, that $24,000 should double, if not triple. The Nasdaq's over the past 10 years and the S&P's doubled. So, 24,000 next 10 years with market performance like it is. Now, past performance doesn't guarantee future results. But if the market does the same, you're looking for 24,000 in between $50,000 to $75,000. That's a lot of money. I mean, I don't know about you. A lot of things I could do with $75,000. But yeah. So that is that. Any questions there? If any questions before we go over the last subject, to get you guys out your hair, but also to add value. So any questions there as we'll go back to percent mode? Or any questions in general, just financial questions in general as we're talking. So the insurance strain. So again, we're just trying to identify things that you're doing now to bring in more money. And auto, homeownership, renters insurance, on average, premiums increase by 10 to 20%. Now, I don't know how many Floridians we have on this call, but my Floridians can attest. Our homeowners insurance, it ain't going up by no darn 10 or 20%. It's like 40 or 50%. Like I literally, in the past 3 years, literally changed two different insurance companies. So I went, basically, we're on our third insurance company over the past 14 months. The first insurance company we used, they no longer do business in the state of Florida because the state of Florida increased how much that each insurance company had to put into the pot per se. So that was that. And then the second insurance company we had for 6 months, and they raised their premiums by 75%. We didn't have no demonstration, nothing happened, but just statewide because they was losing money. Now we know an insurance company, they never lose money. Now they might not have the same profit as before, but they ain't lose no money. But we had a 75% increase in our homeowners insurance. I mean, that's just crazy. So now we're on our third, like I said, in 14 months. And we'll see what happens a year from now. But yes. Oh, Texas too. Texas. Don, you in Tampa. I know, Don. Don, the know to be in Tampa Bay. You know things expensive. Texas, okay, Texas, yeah. So yeah, just crazy. Crazy, crazy, crazy. So yes, things are very, very, can I go back? So things are, how do we go back? Let's go back here. Yeah, so things are very, very expensive. But also, most people haven't shopped insurance usually in 2 years, right? Because what happens, you have something, you renew it, you see something on the news, your friend says, hey, they got the insurance for cheaper, then you call your insurance agent, which is fine. But I would say shop around more. I mean, it allowed us we got the notification about the increase, but we would shop it around anyways, though. But I would recommend that you shop around twice a year because most people either have their insurance where it's semi-annually or annually. So that 5-month time period before you renew, that's when you want to shop around. And it's a couple websites that you can actually use to do this. So again, I like to, and these are the websites I personally use as well. So Policy Genius, now they cover more term. Now, of course, it's a debate. Now we have insurance agents on this. We have clients with insurance agents. So I know it's a debate between whole life versus term. I'll tell you guys what I do. So again, no, I recommend clients to do term and whole life depending on their situation. But for me, we have rather large term policies for me, my wife, my daughter, but also have a key man policy. That's a whole life policy. So heaven forbid if I pass away and go to heaven, then, that key man policy basically, buys the practice so that, the value of my practices basically gets paid to my wife and my daughter. So we do both. Again, some people say term, some whole life, but if you're looking for term, then of course compare. And I actually recommend insurance agents do this as well, especially if you are captive, right? If you're captive, you're able to see what else is out there before you make a decision on going independent. Like I had a friended a client 3 years ago. He was at State Farm for about 7 years. And then, looking at this, said, man, like it's other things out there that is less expensive. I might be losing business because of this. So like that kind of helped him make the final decision to, instead of being at State Farm, where he can only do State Farm policies, to now being independent where he has access to more. So so I actually recommend insurance agents actually look at Policy Genius as well. And then also the Zebra is one. Also bundle home and auto, right? You want to bundle on that. And again, my insurance agents could attest to this. When you bundle something, you typically get a 20 to 35% savings, right? So having a State Farm policy here and an Allstate policy here, no, like you want to bundle that together. Now, it might ruffle some feathers for the insurance agent who loses that business. That's unfortunate, but bundling things together just makes things so much more economical and just so much more better. So yeah. So that is that. Any questions there? And then we got one more thing to briefly go over that I'm out you guys' here. Okay, yeah. So hey, North Carolina, same. So Tony, term versus permanent. Okay. Actually, let's just do a test because we have insurance agents in here. What do you guys or girls recommend? You recommend people do term or they do permanent? No right or wrong answer. I just want to show everybody is, different strokes for different folk per se. Like, one person might have an opinion, might not be right or wrong. So yeah, so what do we think? So okay.
Mario, this is Tony. Can I say something real quick?
Yes, of course.
The risk to say term versus permanent, because I've noticed that a lot of people in the industry, we use the wrong language. And as a certified financial educator, I try to educate people that there's many various policies that are permanent versus term. So always do what's affordable and suitable. And that's why it's so important that we sit down and we do a personal financial strategy so that we can see what is going to be best for the client, not in the best interest of us, but what is going to be best for your client and their needs based on their financial needs and out. So I just kind of wanted to share that input. And I agree. I don't think that one is wrong or one is right. Excuse me, but what is going to be best for your client and what suits their needs, not just for today, but for tomorrow as well. So thanks for allowing me to share that.
Awesome. And Tony is an accomplished insurance agent in Texas. So awesome. Thank you for that input. See, that's good. That is good. That is good. The best life insurance is the one in place when you need it. Yeah, that is correct. Yes, Kingdom Life Financial, that is correct. Have something in place, because if we don't have anything, pass around that collection plate at church, which we saw growing up. Now it's GoFundMe's. Having something in place is most important. So yes, thank you guys for input. Awesome. Okay. So last thing that we're going to talk about, and again, if you have any questions, let me know. The last thing we're going to talk about, because tax season is here, because it's always here. Even though if we have individual taxes, we pay them. If we're business tax, people probably got extension like I did. But when you save money is when you find out how much that you actually lost. That's the savings, because that's the experience. Like, experience is priceless. We write that check, and over time we find out we don't have to write that check because we have write-offs. That is the experience that's priceless, because we won't be in the situation again. So with that being said, anybody here who is a W-2 employee, if you have a side gig or get some type of income that's not that's not W-2 related, this is for you. And anybody that is a business owner, this is for you. 15.3%. Remember, 15.3% mistake, right? Why staying as an LLC is costing you thousands. Everybody here, when they first set up their business, they probably set up as an LLC or a sole proprietorship. And the LLC, from a structure standpoint, is good, right? We recommend when people first start their business. I have LLCs to this day. But the structure of something and how that entity is taxed is two different things. And this what gets people not in trouble, but they're not able to maximize what they can receive from the IRS. So that LLC that we have, we should structure it where it is taxed as a S corp. The reason why, because LLCs pay a self-employment tax of 15.3%. All income. So if I make $100,000 a year, all that is distribution, I'm taxed at 15.3%. Nothing I can do about it if I'm taxed as a LLC. But if I elect as a S corp, It's a lot of other savings you have as well, but just this basic, as an S corp, I get to split the income because in the tax code 162, ordinary, necessary, and reasonable in pursuit of income for your business. Meaning it could be 10 different insurance agents and they run their businesses totally different. So how they pay themselves or how they write off expenses are totally different. But as long as it's ordinary, necessary for your business in a pursuit of income, you're good. Now we have things tracked, and that's why we use Wave apps. But that is why we can literally go from a LC paying getting paid $100,000 to then being taxed as a S corp and saying, I'm going to pay myself $50,000. So now when you have an S corp, the 15.3% tax you pay is only on what you pay yourself, like running payroll, which you could do on Wave apps as well. And it's only $6 a month to run your payroll. So if you want to think everything, again, I'm not recommending Wave apps, but if you want to have everything combined where they track it and they run your payroll, you can do that on Wave apps. It's only $6 a month to run your payroll on Wave apps. By paying yourself, literally, that is a huge tax deduction. So the example, LLC makes $100,000. Now as an S corp, I pay myself $50,000. I'm taxed 15.3% on $50,000. No self-employment taxes, which means I'm saving $7,650 a year. Can't beat that. Also, just as a side note, we can also do a SEP IRA when we have that S corp. So if we have money we want to put away and have our own 401k of our business, a SEP IRA, 25% of what you pay yourself, up to 25% that you pay yourself, you are also able to put that in your own retirement account as well. If it's taxed as an LLC, can't do that. Also, if we have children, another tax hack, we have children. Guess what we can do? Because we're running payroll now with that S corp, which is very easy. Payroll, you're just moving money from one place to another, or you could just have them pay payroll taxes, and that's that, so it stays in your business account. But if you put your kids on payroll, you could pay them up to basically $14,000 a year. Your kids get that money tax free. If it's less than $12,000, they don't pay payroll taxes, you guys. Your kids don't pay payroll taxes. They're under 18. But 14,000, it is tax free, has to be justified. So these kids nowadays, they probably know social media way more than you do. My 11-year-old Miranda, she probably knows, she didn't know social media like that, but she knows social media, right? She knows how to edit stuff. Like I even have a team that edits, but still, we can justify paying her. Also, administrative stuff, marketing. You guys see me on Instagram. I definitely, put my daughter in as well, right? Because child actors, they get paid. So that justifies the income that we pay her. So the money stays in the family. So I get the tax write-off of $14,000. She gets tax-free income. Now, stays in our pocket, right? But it's just a way for you to use the tax code to your advantage. And also, writing off home office deduction. People don't do that. I don't know why, but once you have a home office deduction, like I said earlier, you now have the ability to have all your bills in your house tied to your business, which means your utilities, your cable, all that should be in your paid through your business, not for your personal. Again, for me, like all our bills, our household bills, for the most part, are paid from our business credit card. And then each week, our business debit card pays off, so we're not charged interest. So then everything is filed on Wave apps and our taxes are done. We have that home office deduction. We know that not all of your cable bill, not all of your utilities bill, but some of that can be deducted. So now we have that tracking and that justification because it's being tracked properly and is being used on my business debit account. Health insurance. Anybody that is a business owner, put your health insurance being paid for through your business credit card. We pay our health insurance through Florida Blue, company-wide, through our company credit card. So it is justified, right? Also, business meals. believe you me, every place I eat is going to be paid on my business credit card because I'm out of town. Yes, I'm in England, business, talking to clients, looking at a real estate property. So yeah, so like it's business. Not saying I'm going to buy real estate. I ain't saying that now, but just looking and having it documented justifies a write-off. So I know it is a 99.9% chance I ain't buying no house. I ain't buying no flat. I ain't buying nothing house-wise in Liverpool, England. But I'm able to justify write-offs because I am doing business activities. So yeah, travel, electronics, etc. So, any questions for me? Okay, let's see. If I have any DMs because I know I was talking, but Donna, yeah. So Donna, D. So my shop because definitely if you use our platform. I don't know if you use our platform for your client, but we can definitely help you set it up either way, Adana. So my mods, you guys can get Adana's information. Just remind me when I get back in town next week. I'll reach out to you. We can definitely make sure we get that set up for you. But definitely anybody, if you're a W-2 employee, set up an LLC. Strongly recommended. Even if we're not getting any business income as of yet, you have 3 years of doing things in a pursuit of income where you're not bringing in income, but you're doing things. But then also side conversation, but it is ways to actually use some of your W-2 income as business income. So anybody here, we have, clients of ours that are W-2 employees. It is ways that you can use the tax code to your advantage, even if you don't have a business, by setting up a business and using some of your W-2 income as business income. And definitely, DM me or let me know, let us know at the office, and we can definitely have a more detailed conversation and help you with that. Because the tax code, it is not meant for W employees. The tax code was created years ago before all these multinational companies came into existence, right? Years ago, even though 84% of employment is through small business, but years ago, it was like 95%. But now these big, large multinational companies have found a way to really manipulate the tax code. The tax code wasn't even created for them, but they found a way to manipulate it. So why can't we do the same? Why can't, as a small business owner, we find things in the tax code that we can take advantage of? Because the IRS is taking advantage of you. So if it's legal, ethical, and moral, why not do it? And especially with IRS code 162, ordinary, necessary, and regular in a pursuit of income for your business, why not do it? Right? I use it all the time. I have a client that's a real estate agent in Jacksonville. She bought a boat. I'm on a boat. She bought a boat about 5 years ago. She was able to write that boat off because she uses that boat to entice clients to buy houses on the St. Johns River. So they're on the river. They're seeing views of a house on the river, right? Now, of course, she uses that boat to entertain, and her husband is a fisher, right? So, he was using that boat as well. But again, she was able to justify that $75,000 price and then all the maintenance, because anybody with a boat, they'll tell you a boat costs more to maintain than to buy. So the maintenance involved and also the purchase of the boat is all a write-off because once a month she has a group of individuals hop on a boat with her, showing houses on the St. Johns River and the view of a person looking at your house as if they was on a lake or on the river for Jacksonville. So it's so many things that you can do. We just have to do it. All right. So, questions for me. Okay, cool. Evelyn, you too. Okay. Yeah. Definitely. I could, my mind just remind me when I get back in town to contact, Adana and, actually my mind, y'all could just, cause I should have y'all number, of course, but definitely my mind, just get their information so I don't forget. I'll get back into the swing of things and drop the ball. What other questions do we have for me? Let's put a one. If this was good information, let's put a one in the chat. If this was good information, awesome. All right. So, I want to respect for everybody's time. So, Any other questions? And let me look at my DMs. Okay, thank you. Awesome. Thank you. Oh, thank y'all. Damn. Okay. Okay. Oh, I had a question. Okay. I'm sorry. I've been blabbing my mouth. I did have a question. So if I work full time, how am I able to have business write-offs? That is a great question. So when you work full time, what you do with that full time job, they're paying you for it, right? But even people that like do Uber, for instance, I'm not telling people to do Uber, but that's an example. People that have side gigs, you get a separate 1099. So when you get separate 1099, that is your own business. A lot of people with side gigs, they just get that 1099 and they kind of file, boom, 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 right? But structure it properly. And I use, and people may have heard me talk about this before. If it's the first time, yeah, here we go. Right? It's called the S plus S plus S equals wealth strategy. My mind, y'all can put this into the chat. But just remember this plus S plus S equals wealth. The first S is structure. So using that example, if I am a W-2 employee, but I have some type of side gig, or like I have clients that are doctors and they do like consultants on the side, right? That is a great way for you to not only have an LLC, but to structure things properly where you're being taxed as an S corp. So now everything that you do, because you have your structure property, everything that you do is literally a write-off. If I'm a consultant, when I'm talking to people, that's a write-off. When I'm in my car returning a text message, that's a business activity. So now my car is a write-off. My car payment, if it's structured properly. So that's the S. The second S stands for strategy. So using that same example, right? Anybody that's a business owner strongly recommend the next car that you get, put it in your business name. Now, the question is, well, I don't have the business credit like I have the personal credit. Well, give us a call. We can help. Or reach out to Bank of America. Not an endorsement with Bank of America because they ain't paying me for this. But Bank of America has a program where they will allow you to buy a car in your business name, but have your credit ran through your personal. Again, it might be other things. I just know Bank of America because I've done it, right? And I've had clients do it. Bank of America will do it where they will allow you to, again, I sound like Dr. Umar. If y'all know who Dr. Umar Johnson is, y'all know he says the same three different times. So I know I repeat myself like Dr. Umar Johnson. He wanted to be in Africa right now, not in England, but a conversation for another day. Okay. So yeah. So what you want to do is contact Bank of America and they will have you from a strategy. So S plus S plus S. So the strategy, having you putting that car payment in your business name. Now, your car payment should be to write off, or you could do a bonus depreciation when you depreciate everything within 1 year. So if your car payment is $50,000, that could be a $50,000 write off all in 1 year, right? That is strategy. And then the last S stands for speed because we get information. We have these coaching calls where we give you all the game in the world. But if we don't do the speed and apply it, it doesn't matter. So like right now for all of our clients, we are doing tax planning for the year 2026 right now. Why wait until next year? You're going to miss out on 6 months. That's money that we could save and get back that we will never get back from an IRS standpoint if we start everything started in 2026. We need to start everything today. Start now. So Wave apps, every single person who needs it or thinks they need it, do Wave apps right now, right? Everybody who's going to get a card, structure your business right now and we can help you guys or just do it yourself, whatever. Structure things that once you buy that car, it's in your business name, it's ran through your personal credit so you can still get a low interest rate and implement what we're talking about. That's going to give you more money in your pocket, and more money in your pocket means how you create wealth. I know I just went on a tangent, you guys. My apologies. I went on a tangent. I'm sorry. But yeah. So cool. All right. So structure, strategy, speed equals wealth. So let us lead us out with a prayer because if it wasn't for the Lord, we would have waked up this morning and he blessed me and my family to fly over the Atlantic Ocean safe and sound. So we close our eyes and pray. Dear Lord, thank you for your love. Thank you for your blessings. Thank you for being our lives. Thank you for allowing us to walk and talk and be healthy. May you bless everybody on this call. May you bless their friends, bless their family, bless their business, bless their jobs, and may you bless them with the abundance that you continue to bestow upon us. May you touch everybody here and across our nation and the world. In Jesus' name.